guys, welcome back to the channel. In today's video, we are talking about S corporations or S-Corps. In this video, we'll talk about what they are, some of their pros and cons, and how to get one started. By the way, be sure to stick around to the end for discounts you wouldn't be able to get on your own. So, that being said, what is an S-Corp? Well, to put it simply, an S-Corp is a tax classification that may also be considered its own business entity. Some S-Corps evolve from an LLC before becoming an S-Corp. An S-Corp can give their owners, we call shareholders, special tax benefits, limited liability protection, and add credibility to your business. So at the heart of it, the first and what I consider the biggest selling point of an S-Corp are the tax perks. S-Corps are taxed by pass-through taxation. This means the business's profits and losses are passed through to the shareholders' personal tax returns. By taxing the business at the individual shareholders' rate rather than the corporate tax rate, the business should in theory be taxed at a lower rate, meaning less money owed to Uncle Sam. Shareholders actively working within the business are paid through a salary from the company. Being paid a salary, that shareholder would get a W-2, just like millions of other Americans. Now, the salary the shareholder gets from the S-Corp is subject to self-employment taxes. Those taxes include the employee and employer's share of the Social Security and Medicare taxes, or FICA tax, which come out to about 15.3% for the first $160,200 earned. But along with a salary, shareholders can also get distributions from the company's profits. Distributions are considered a return of their investment in the company's stock. Now, unlike the salary, these payments aren't subject to that FICA tax. This system can potentially help S-Corp shareholders save a significant amount of money on their self-employment taxes. If you were in a sole proprietorship, which is another type of business entity with a single owner, all income would be subject to the self-employment tax. So what would this look like in real life? Well, say in my tutoring business, I made $80,000 in revenue. After I accounted for my business expenses of $5,000, that would leave me with a net profit of $75,000. Now, out of the S-Corp, I pay myself a reasonable annual salary of $45,000. I'll get a W-2 and pay self-employment taxes on that income. That will then leave me with $30,000 of net profit within the company. Now, at any point throughout the year, I can then transfer any portion of that remaining net profit into my personal checking account as a distribution or owner withdrawal. On the other hand, if my business lost money in that tax year, I can use those losses to offset other income on my personal tax return. This means that as a shareholder in the S-Corp, I can use that loss to reduce my taxable income from other sources like wages, investments, or other businesses. But it's important to mention the amount of loss that can be deducted is typically limited to the shareholder's position in the S-Corp stock and debt. If the losses exceed the shareholder's position, they may be carried forward to future tax years. Now, I want to add a disclaimer. The figures I used in this example are totally made up, but there are some guidelines when it comes to determining a shareholder's salary. Now, these recommendations don't come from me, but rather the IRS itself, so it's important to make sure you're playing by the rules. The salary an S-Corp shareholders receives must be reasonable compensation for the work performed. When we use the term reasonable compensation, we are in a sense pricing the shareholder services as if they were working for someone else in a similar industry and position. Overall, it's important to do your market research to make sure the salary doesn't raise any red flags. While sure, a higher salary means more taxes owed, a lower salary could trigger audits or penalties with the IRS, so it's important to do your due diligence. Finding a balance between salary and distributions is essential to both maximizing your tax savings and stay compliant with the IRS. Now, before we move on to limited liability, I want to mention stock in an S-Corp. So in my business, I am the sole owner. In an S-Corp, ownership is divided into shares of stock. So flying solo, instead of saying I own 100% of the business, I would say I own 100 shares of stock. Each share represents a piece of ownership. If I had business partners or other stockholders involved with the company, then we would work together to split the shares of stock to represent our level of ownership. But see, that level of ownership part is pretty important. Now, say I decide to bring my mom into the business. Just because I incorporate her as part owner doesn't mean she automatically gets 50% of the business, or 50 shares of stock. How those shares are split is based on several factors, like how much of an investment was made by the shareholder, as well as their contributions to the business. It's important for shareholders to all agree on their portion of the stock. It would be a shock to my mom, who wanted 10 shares of the business, to get 50, and vice versa. So establishing clear agreements on how shares are distributed is important. When it comes to shares, a business can't have more than 100 shares, just like it's impossible to have more than 100% of something. But there are limits to who can be a shareholder. For example, shareholders must either be U.S. citizens, resident aliens, estates, trusts established within the U.S., or nonprofits with tax-exempt status. Other partnerships, corporations, or non-resident aliens cannot be shareholders in an S-Corp. Now, in terms of shareholders, those who own more stock generally have more influence over decisions in the company. The same can be said about voting rights. The more stock a shareholder holds, the more voting rights, and therefore the bigger say they have in the actions of the company. The size of your share is also going to influence the size of your share in the company's profits. Think of an S-Corp or any company as a pie. The more you own, the bigger the slice. So you see, while the level of ownership may not be equal among the stockholders, all stockholders generally have certain rights and responsibilities. Those can be the right to receive dividends, access to information about the business, and the responsibility to comply with government requirements. Okay, so now that we've had the stock talk, let's talk about limited liability. Now, S-Corp shareholders get limited liability protection too. This means that if your business is sued for whatever reason, your personal assets should remain off limits from your business property. Now consider your home and vehicle. Chances are they are in your name. If you're married, there may be an additional name on there, but still, your name is on there. So say I don't have limited liability protection for my tutoring business. That means there would be no separation between my business property and my personal property, like my home and car. Without those protections, my personal assets would be considered fair game if I were sued. Now, in addition to everything else, establishing an S-Corp can enhance your credibility as a business. Going through a more detailed formation process than some of the other business structures out there, you are showing investors and customers that you're serious about your business and it's not going away anytime soon. In fact, corporations have what's called perpetual existence, meaning the business can continue to exist beyond the life of its owners. Now, if you ever need to step away from your business, S-Corps allow ownership interests to be transferred through the sale or transfer of shares of stock. This gives you a fairly easy way to sell your share of the company or bring in new investors. Now, despite the benefits, there can be drawbacks as well, like eligibility restrictions, more compliance requirements, and higher fees. Now, in terms of eligibility restrictions, to be eligible to be considered an S-Corp, your operations must be based domestically in the U.S., and your income must come from domestic sales. Some businesses are not able to be S-Corps. Those include banks, insurance companies, and domestic international sales corporations. In an S-Corp, you're responsible for more compliance requirements than other business structures, like a sole proprietorship or partnership. Some of these obligations include filing articles of incorporation, adopting bylaws, holding shareholder meetings, maintaining corporate records, and filing annual reports with the state. And finally, fees. Fees to form an S-Corp can be higher than other business entities, like a sole proprietorship, for example. Some of these additional costs include incorporation fees, annual state filing fees, and potentially legal and accounting fees. So what about other business structures? How does an S-Corp measure up with, say, a sole proprietorship or a C corporation or C Corp? Now, compared to a sole proprietorship, their structure and ownership is definitely different. A sole proprietorship is owned and operated by one person. That's where the sole part of sole proprietorship comes into play. And owners are considered the same entity as the business. There is no separation. Now, on the other side, while an S-Corp can be owned by one person, they can also be owned by several people. In this structure, there is separation between the owner and the business itself, aka they aren't considered the same entity as they would in a sole proprietorship. There is also a difference in how they are taxed as well. While both sole proprietorships and S-Corps are considered pass-through entities for tax purposes, meaning taxes are paid at the individual shareholder rate, the biggest difference is how the profits are taxed and how self-employment taxes are handled. This can give S-Corp shareholders some tax advantages compared to sole proprietorships, since they aren't subject to self-employment taxes on their share of the business profits. And while sole proprietors are subject to being taxed on their total net profit, S-Corp shareholders are only taxed on their share. Alright, so I gotta mention liability protection. Now, in a sole proprietorship, there is no legal separation between the owner and the business. So because of that, the owner then has unlimited personal liability for business debts and obligations. In an S-Corp though, shareholders do have limited liability protection. Because of this, personal assets are generally shielded from business liabilities. Alright, so how does a C-Corp measure up to an S-Corp? Well, as we've mentioned, an S-Corp limits their shareholders to 100 and who can be a shareholder. In a C-Corp, that limit doesn't exist and leaves who can be shareholders more open-ended. They also have different types of stock you can have, which definitely opens up the door to more hassle and having more people to answer to. Now, in terms of taxes, a C-Corp is taxed through double taxation, which is a fancy term for being taxed twice. Profits are taxed first at the corporate level and then again at the shareholder's individual tax rate. We all know this isn't the case for an S-Corp, which is taxed as a pass-through entity, avoiding being taxed twice. Now, in terms of liability protection, both shareholders of a C-Corp and an S-Corp benefit from limited liability protection, so their personal assets are generally shielded from business liabilities. So if an S-Corp sounds like the next best step for you, how do you start one? Well, first things first, you'll want to choose a name for your S-Corp. Be sure to check with your state to make sure that name isn't already taken. It doesn't hurt to use this time to check out any permits or licenses you'll need for your business. Next, you'll need to file Articles of Incorporation with your Secretary of State's office. This document is what will officially create your corporation. In it, you'll have your corporation's name, address, purpose, and the number of shares of stock it's able to issue. Your next step is naming directors for your corporation. The directors are responsible for managing the corporation and making major decisions for the business. Once the corporation is formed and your directors are named, you'll need to get everything organized. During this time, you'll adopt bylaws, elect officers, issue shares of stock, and use this time to take care of anything else that comes up. To be sure you're getting the tax benefits an S-Corp provides, you'll also need to file Form 2553 or 2553 with the IRS. This form lets the IRS know that your corporation wants to be treated as an S-Corp for tax purposes. You must file Form 2553 within around 75 days of starting your corporation. Once your S-Corp is set up, the fun of maintaining your business legally begins. The first thing you'll want to do is set up a system to keep track of all your important documents, like your Articles of Incorporation, bylaws, meeting minutes, and stock certificates. You'll also need to comply with ongoing requirements, like having yearly meetings with shareholders and directors, filing annual reports with the state, and maintaining your financial records. Now, I know this sounds like a lot, and for one person, it totally is. But there are professionals who do this kind of stuff every day that can help. When I was initially starting my LLC 3 years ago for my tutoring business, I was absolutely clueless. I knew I wanted to start, but I had no clue how to do that on my own. A friend told me about Tailor Brands, and I've continued to use their services since. Tailor Brands can help you with just about everything in your business. They can help with filing your taxes, opening business accounts, and even marketing your business. I've really benefited from their marketing resources. They offer a few features to make branding your business a little bit easier. You can get a few things like a free web domain for a year, a website design builder, 8 free logos, a digital business card, and tools for creating content for social media. That being said, I see Tailor Brands as one of the best business formation services out there, especially for beginners, because they take care of everything on your behalf. Now, don't get me wrong, there are other great services that I've also tried, like ZenBusiness, LegalZoom, and Swift Filing. So I'll go ahead and leave some review videos down in the description if you want to learn more about them too. So what does Tailor Brands cost? Well, one of the most frequent services they provide is LLC formation. which, if your goal is to be taxed as an S-Corp, is great news for you. You can have an LLC and be taxed as an S-Corp with the proper paperwork. It's one of the flexibilities S-Corps have. So the support Tailor Brands can provide ranges from a lot to a little, depending on the level of help you're looking for. If you have it all put together and need minimal help to get started, the light plan may be the best fit for you. Now, the cost is free, so it's definitely budget friendly. Your only financial obligation would be the cost of the state fees. In terms of paperwork, it'd all be on you to complete, and the processing time for your documents through Tailor Brands is 14 days. So if you have time to spare and you're able to handle it all yourself, this could be the right choice for you. If you need more support with the legal stuff but are a branding whiz, you can go with the Essential Plan. This plan includes helping you establish an operating agreement for your LLC, handling your annual compliance obligations to make sure your LLC stays legal, and when you form your LLC through them, they'll expedite your paperwork to your state within 2 days versus their standard 14-day processing time. This plan runs around $200 a year, and just as a heads up, you would still need to pay your state fees separately. If you're like me and need help with it all, you can choose the Elite plan for around $250 a year. This plan gives you everything you get with the Essential plan, plus their online branding and marketing tools that we mentioned earlier. Now, I didn't wake up one day and decide I was going to be a full-time tutor. I was an elementary school teacher and love my job. Unfortunately, my district was going through budget cuts, leaving me furloughed. I started my business so I could still earn a living and continue doing what I loved, teaching. Starting a business, I needed support with everything, so I chose the Elite plan offered by Tailor Brands. Now, I understand it is the more expensive of the three, but I feel like the benefits outweigh the costs. And that wraps up today's video. I really hope you found this video useful, and if you did, please hit the like button and subscribe for more. And as for those discounts I mentioned in the beginning of the video, if you want Tailor Brands to help form your business, check out the affiliate link in the description for discounts you wouldn't be able to find on your own. And while you're there, check out my in-depth review of Tailor Brands. Also, feel free to leave any questions in the comments below, and I'll try my best to answer them as soon as I can. Thanks again so much for watching. See you next time.